In a surprising turn of events in the automotive world, Tesla, once the undisputed symbol of innovation in electric vehicles, now finds itself at a crossroads. The company led by controversial Elon Musk recently announced massive discounts on its vehicles, ranging from $8,000 to an impressive $40,000, in a bold attempt to revive falling sales. This dramatic market move raises crucial questions about the future of the company and the electric vehicle sector as a whole. Imagine walking through a Tesla dealership today. The gleam of futuristic cars is still there, but something has changed. The salespeople, once confident and relaxed, now seem more anxious to close deals. A shiny Model Y catches your eye, and the salesperson approaches with a smile, announcing a discount of $8,170. A few years ago, this would have been unthinkable for a brand that barely needed to advertise. But times have changed. Tesla, which once dictated the rules of the game, now finds itself forced to play by traditional market rules. The company's referral program has been beefed up, offering a $2,500 discount on the Model 3 for customers using a referral code. And it doesn't stop there. 0% APR financing is available on some models, with incentives ending on March 31, 2025. It's a race against time to boost sales before the quarter closes. These aggressive sales measures don't come out of nowhere. Tesla is facing a perfect storm of challenges. Sales are in free fall globally, with significant drops in Europe and the United States. The market that Tesla once dominated is now filled with fierce competitors. Ford, Chevrolet, and Volkswagen are rapidly advancing in the US, while Chinese giant BYD is making impressive inroads in Europe. The drop in sales has had a devastating impact on Tesla's stock. Since January, the stock value has plummeted more than 40%, erasing gains from earlier in the year. For many investors, this is more than a market fluctuation. It's a warning sign. Confidence in Tesla's ability to maintain its leadership position is shaken. Perhaps even more worrying is the behavior of Tesla owners themselves. According to Edmunds, a respected source of automotive information, Tesla owners are trading in their vehicles at record levels. This exodus of loyal customers raises questions about customer satisfaction and long-term brand perception. At the center of this storm is Elon Musk, the visionary CEO whose charismatic and controversial personality has been both a blessing and a curse for Tesla. Musk's recent forays into politics and his controversial statements on social media have done nothing to help Tesla's stock or sales. In fact, there's a growing clamor among some shareholders and industry analysts for Musk's removal as CEO. Critics argue that Musk's erratic behavior and divided attention between multiple ventures, from SpaceX to Twitter, now X, are hurting Tesla's brand value. The controversies surrounding him seem to be driving away some potential consumers, especially those concerned with social and environmental issues. The situation has reached such a critical point that protests and acts of vandalism against Tesla facilities have increased. Images of Tesla showrooms with broken windows and hostile graffiti have circulated on social media, painting a grim picture of the company's public perception. For a brand that was once seen as the clean and bright future of transportation, this shift in public opinion is particularly painful. But it would be premature to declare the end of Tesla. The company still has significant advantages: a strong brand, cutting-edge technology, and a loyal fan base. The massive discounts and incentives may well be the necessary strategy to overcome this difficult moment. After all, other traditional automakers have used similar tactics to stimulate sales during low periods. The question that remains is, are these discounts a temporary measure or a sign of fundamental change in Tesla's pricing strategy? Some analysts argue that Tesla is finally adjusting to the realities of the mass car market, abandoning its former stance as an untouchable luxury brand. Others see this as a desperate move that could harm the brand's perception of exclusivity in the long run. The timing of these discounts is particularly interesting. With the end of the first quarter of 2025 approaching, Tesla seems determined to boost its sales before closing the books. This raises questions about the pressures the company is facing from investors and Wall Street analysts, who will be closely watching the quarter's sales figures. Meanwhile, Tesla's competitors aren't standing still. Ford and GM are investing billions in their electric vehicle lines, with models like the F-150 Lightning and Chevrolet Bolt gaining popularity. In Europe, brands like Volkswagen, BMW, and Mercedes-Benz are rapidly electrifying their fleets, and, in China, companies like BYD are not only dominating their domestic market, but also making significant inroads into Europe. This intensification of competition puts Tesla in a challenging position. The company that once enjoyed a near monopoly in the premium electric vehicle market now has to fight for every sale. Consumers have more choices than ever, and many of these new competitors offer competitive features and prices. Tesla's response to these challenges goes beyond discounts. The company is accelerating the development of new models, including a more affordable entry-level vehicle, often referred to as the Model 2. There are also rumors of significant updates to existing models, including improvements in range and driver assistance systems. However, technological innovation alone may not be enough to turn the tide. Tesla needs to address quality and customer service issues that have been damaging its reputation. Reports of quality control problems and long wait times for repairs have been a constant source of frustration for many Tesla owners. Additionally, the company faces regulatory challenges in various markets. In the U.S., Tesla's full self-driving driver assistance system has been under scrutiny from safety authorities. In China, data privacy concerns have led to restrictions on the use of Tesla vehicles in certain government facilities. Despite these obstacles, it would be a mistake to underestimate Tesla's and Elon Musk's resilience. The company has overcome significant challenges in the past, often proving skeptics wrong. Musk's ability to inspire and mobilize both employees and fans should not be underestimated. The current discounts may well be a strategic step to clear inventory before launching new models or significant updates. If this is the case, Tesla may be positioning itself for a strong comeback in the coming quarters. Moreover, Tesla's charging infrastructure, the supercharger network, remains a significant advantage. Recently, the company began opening this network to vehicles from other brands in some markets, potentially creating a new revenue stream and strengthening its position in the overall electric vehicle ecosystem. Tesla also continues to lead in areas such as energy efficiency and automotive software. Its vehicles regularly outperform the competition in terms of range per kW, and the company's over-the-air software updates are often cited as an important differentiator. However, Tesla's future will largely depend on its ability to navigate current challenges without compromising its long-term vision. Discounts may boost sales in the short term, but the company will need to find a balance between accessibility and the premium brand perception that helped build its initial success. For consumers, this is an interesting time. The discounts make Tesla vehicles more accessible than ever, offering the opportunity to own a piece of the electric future at a lower price. However, potential buyers should carefully weigh the pros and cons, considering not only the initial price but also factors such as reliability, long-term cost of ownership, and alignment with their personal values. As the March 31 deadline approaches, all eyes will be on Tesla. First quarter sales numbers will be a crucial indicator of the effectiveness of this discount strategy and a harbinger of what's to come for the company. For Elon Musk and the Tesla team, the coming weeks will be crucial in defining the company's future, and potentially the electric vehicle industry as a whole. Ultimately, Tesla's current saga is more than just the story of a company facing market challenges. It's a reflection of the rapid changes occurring in the global automotive industry, the growing importance of electric vehicles, and the role that charismatic personalities like Elon Musk play in shaping public perceptions and market trends. As consumers take advantage of the discounts and investors watch anxiously, one thing is certain: the outcome of this battle will have far-reaching implications not just for Tesla, but for the future of electric mobility worldwide. The path ahead may be uncertain, but it promises to be as exciting and transformative as Tesla's own meteoric rise to automotive stardom.